What are you seeing right now in terms of the consumer? We're heading into the holiday shopping season. That's the most important quarter for any retailer. What do you see in the stores across the country?
Yeah, I think we continue to see a very healthy consumer environment. Obviously, a very strong labor environment. Unemployment continues to be very low. The percentage of consumers that are in the workforce continues to grow. Wages are rising. Consumer confidence is strong. And all the indicators right now would say this is going to be a very solid holiday season. Indications are somewhere between 3% and 4% growth for retail shopping in the holiday season. So we want to make sure we're there to take market share during the holiday season and delight all the Target guests who shop our stores and shop online.
Where do you think you'll be stealing market share from? What competitors?
Yeah, well, when you think about our business, it's fairly unique because of this multi-category portfolio. So we've got a big apparel business. About 20% of our business is apparel. Apparel was up over 10% in the third quarter. So we're clearly delivering great value and quality in apparel, and we're seeing that rewarded by more trips into our apparel department and more shopping online. We've got a big home business. Clearly, when it comes to holiday season, electronics and toys are a big part of our assortment. But so is beauty. That's one of our fastest growing categories. Essentials are really important, and we're seeing a great reaction to our new brand, Good & Gather, in food and beverage. So we have an opportunity to take market share in apparel and home, in toys and electronics, in essentials and beauty, and in food and beverage. And that's really kind of the magic of our business.
But who are you stealing the market share from? Are these shoppers who used to be going to the malls, but now they're buying a lot more clothes here at Target?
Well, it seems to be. Obviously, traffic was up. And while there's a lot of important factoids when you went through the report, traffic being up over 3% is one of the most important indicators for me. When I look at the health of our business, when we have traffic growing, I know we're winning footsteps. We're getting more footsteps into our stores and more clicks to our site. And that's really the indicator of a healthy business for us.
You have 6 fewer days, every retailer does, six fewer days between Thanksgiving and Christmas this year, which is usually a pretty heavy hurdle to try and jump over, just because you need days to get people in the stores. If you're going to have 6 fewer days, inevitably it's going to be a tougher comp. What do you do to try and fight that?
Well, we've been planning for it all season, so it's not a surprise. We know it's going to be a very intense shopping season. Every day counts. So we've really made sure we're investing in our team. So $50 million of additional wages during the holiday season. Yeah. We put a lot of time into training, 500,000 additional hours of training to make sure our teams are ready for the holiday season. We'll have twice as many team members working on same-day fulfillment. So we're really making sure that from a team standpoint, we're investing in that important asset. And our teams are ready. We'll be staffed and there and ready to deliver against the guest needs.
That's not cheap to get more people who are working, paying them higher wages, making sure that you can deliver more things on same-day delivery. And yet, I think your margins must have improved pretty significantly, at least in the third quarter. And when you look at it, the revenue beat by a little bit by what the street was expecting, but earnings per share beat by a lot. What happened? Where are you seeing margin improvement?
Well, you saw our operating income grow by over 20%. EPS was up 25%. And I think it's the balance between really strong top-line growth, the margin mix in our business, a great growth rate in categories like apparel, strength in home, in beauty, but also, we're changing the way we fulfill. So unlike, many others, a big part of our fulfillment is that same-day offering, where our stores are really at the center of how we fulfill our digital experience. So,
do you make money on that, though?
Those economics, when it's delivered by our stores, when it's order online and pick up in a store, or it's drive up, those look a lot more like store economics. So we talked about this actually last year in March at our financial community event. When we go from shipping from a DC to fulfilling from our stores,
distribution center to fulfilling in your stores,
about 40% of the cost goes away. But when it's order online and pick up in store, or drive up, or fulfill by ship, about 90% of the cost goes away. So those economics look a lot like store economics, and we certainly like that, but importantly, so does our guest. Yeah. They like the convenience, the ease, the fact that they know they can order online and conveniently come by a Target store, and we'll have it ready for them.